All right, cool. So guys, I'm gonna be talking about how our APIs enable this next-gen banking. But before getting into all of that, I want to remind everyone what's the problem that we're trying to tackle here today. And I'm going to approach this from the perspective of payments, because payments is a great proxy for banking as a whole. So whatever happens in payments is also valid for whatever happens in banking. Cool. So let me start with this statement. Ever since electronic payments was created, it was never disrupted. You may disagree with me right now, but hear me out. So let's look at the evolution of payments on the front end. And it's important to say that payments revolves around the word trust. And evolution happens every time someone creates a more secure or more scalable solution to ensure trust between the two parties, one of them being the merchant and the other one being the consumer. So cool, so let's look at the evolution of payments starting from the 1950s. In the 1950s, the Diners Club card was created. It was basically a private members club where you would walk to any of these restaurants, you would show your card, and then you would just walk out. Great experience, but still very local, right? Because it's only limited to restaurants. So in the 1960s, Bank of America printed a bunch of cards and gave these card imprinters to a lot more people. So the experience was a lot more scalable, but still a mess, a logistical mess in terms of logistics, right? Because all of a sudden you had a merchant that would need to call, get an authentication code, stack all these, pass this card, stack all these pieces of paper, send them in to the headquarters either at the end of the day or at the end of the month. So in the 1970s, we went digital. Amazing. So all of a sudden, you have all this mass, but still very prone to fraud, right? Because you could sign Mickey Mouse and then say that it wasn't you making a transaction. So 1990s, chip and pin. All of a sudden, you have this code that supposedly only yourself know. A lot more fraud-proof. And then NFC. So why would I input my super secure code for low-value transactions? And then finally, the mobile, right? Amazing. So all of a sudden, you have this device that authenticates that it's you making a transaction and only yourself. So payments has evolved on the front end, but let's now look at the back end. So in the 1970s, a bunch of banks get together and they create the standards for processing credit card transactions. That is Visa Base 1 and Visa Base 2. If you recall the previous slide, Bank of America, BASE there stands for Bank of America Systems Engineering. So Visa is a spin-off of Bank of America. So let's now look what happens over the years. So 1990s, 2000, 2010. So over the past, I guess, 50 years at this point, we've been using the same backend. And that, to me, is crazy because it's like, I guess the analogy here is that you have the most amazing TV, right? All LED technology, super thin, but you're watching the game in a 1970s resolution, right? That's basically what's happening here. And what happens when you have evolution on one side? This happens. You go from a system that is designed to be a 5-party model to this, because you have a bunch of orchestrators, aggregators, processors, whatever else, simply because an iPhone cannot talk 1970s technology. And do we think that every time that one of these new players come in, all the other ones are going to be like, oh, awesome, here's a piece of my revenue? No. It's added cost for the merchant, and then ultimately who pays that cost? It's us, the consumers. By the way, this is also known in the industry as spaghetti systems. You can kind of get a sense of it, a visual sense, connecting older tech with newer tech. So what do we do at Gnosis Pay? We just focus on that backend. We're basically just building the blockchain banking rails for making banking global, instant, and cheaper. And banking here, I'm talking about, not just payments. Cool, so how the hell are we gonna do that? So we divided banking in 6 different layers. We have layer 1, which is the store of value, right? That's pretty simple. It's done through a smart contract account. We have the layer 2, which is the identity and compliance. So how is it that we can make sure that it's you having access to your funds and nobody else? So we developed a compliance toolbox here that enables you to do your asset screening, your KYT, your AML, whatever it is. So you can have access to the traditional banking rails, the TradFi systems. We have then a payments component, which is there's a global component, there's a local component. So the global component is what we're known for so far, which is the card. It's which enables you to spend stable coins at any of the 80 million merchants of Visa. And then there is a local payments and transfer components, which to me is the differentiator. It's what makes a difference, right? I want to be able to pay my friends directly to their traditional, their fiat account, whether I'm in Brazil using a PIX transfer, whether I'm in Europe using an IBAN transfer, and I don't want to pay any money for it. I don't want to pay a conversion rate every time I'm entering and exiting the blockchain. So that's exactly what we built. We leverage all these players. So we have Monerium, we have BRLA, we have Noah. And so if you're in Brazil, you can use PIX to send 1 Brazilian real. You get 1 Brazilian real on chain. Europe with an IBAN, and right now we're opening up the US dollar account. And then the layer 5 and layer 6, to me, this is the intrinsic value of blockchain, right? You have the borrowing and credit and the savings and wealth building. That's just a plug and play at this point. So cool. So why does it matter? And what has changed since 1 year of us launching? This is a bit of a lie because it's actually a year and a half. But we processed 1 million payments. That's 1 million crypto payments being processed seamlessly at merchants all around the world. In more than 115,000 merchants, across more than 10,000 cities, in over 130 countries across all 5 continents. So that is the scale that we could get within 1 year and a half of launching, and that's a scale that you, as a company integrating with our APIs, you can have access since moment 1. And this was all done using an on-chain self-custodial smart account, but I cannot stress this enough. We are not here to be a neobank ourselves. We're here to build the infrastructure for powering the next thousands of them, whether crypto native or not. So we're basically embedding the superpowers of blockchain within our APIs. Okay, so Gnosis Pay has been built for the open internet and with the developer's first approach. What the hell does that mean? Simply means that our APIs are permissionless, whatever they can be permissionless. So you can today log in with your wallet, authenticate yourself with your wallet, I'll show you guys after, and control the card fully from APIs. And you can embed that experience in whatever decentralized application, whatever front end you would like. So far at this point we have a lot more than 3 partners integrated, but these are the early ones, the ones that trusted us since moment 1. So we have Zio, pretty popular at this point as a series of ex-Revolut guys. Picnic, doing fantastic in Brazil. At this point, we're getting thousands of new cards activated every day. And the very interesting thing here is that these are not crypto users. These are normal users that want to have access to on-chain FX and basically, have a better banking experience than their current alternatives. And then, of course, we have Mattia, which is the Gnosis gateway to Circles. So our motto these days is that we ship stablecoin card programs in minutes, and we have 2 ways of working with partners. So we have the startup plan, which is completely free. And this is incredibly fast, right? You just connect to our APIs, you build the front end, and since moment 1, you have access to a self-custodial debit card that enables you to spend stables in all the merchants around the world. And you have access to all the local payment rails in Brazil, in Europe, in the US, whatever you are. Of course, we're gonna add a lot more as we go, but that's the point of the startup plan, is to get you started as fast as possible and gain market shares in any of the markets that we're currently in, providing that really nice front-end experience. And then, of course, we have like an enterprise plan, which is, of course, more custom cards, and you can change fees, you can do a lot more with it. So, a live demo, actually, it's usually worth more than 1,000 words. So let me see if I can show you guys exactly what I mean by making, by having these permissionless APIs. So here I have my Postman collection of APIs. So you can see here all the different modules. There is authentications, there is user management, there is KYC, there is card orders, whatever. You can get also here banking accounts integration. So all the endpoints are here. I'll send you the link after, but you can get access to it. And then here I have this little app, which is basically enables me to sign in with Ethereum, this CW authentication. So first things first, what I'm gonna do is I'm gonna connect my wallet, I'm gonna go to the APIs, and I'm just going to authenticate myself. So first things first, I'm going to request a nonce. So using Postman, boom, here's my nonce. I'm gonna go into my little app, I'm gonna copy the nonce, sign in, and then here using my Zerion wallet, I'm going to sign the transactions. Now this is the authentication data. So I'm gonna go back into my APIs, and I'm going to basically verify that the message that I signed is actually correct. So that basically it's my wallet authenticating. And boom. So right now I'm getting this token. This is my session token, which enables me to interact with the rest of the APIs. So let's go here and let's try to get my user profile. So just gonna press here. This is my user profile. It's Mattia, it's my test account. This is my sign-in wallet. This is my safe account. KYC is approved, and then here are all my cards. Can do a lot more than this, of course. We can, we can request the IBAN. We can, let me see if, I mean, here you can see the referral status. So basically, I referred 0 people so far. But anyways, so let me right now show you guys how easy it is to create a new card. So this is an interface. It's just a web app that we currently have. Probably we're going to turn it off at some point because, as I mentioned before, we're going fully with partners. So it's just going to be fully partners providing that front-end experience. But here's my 3 cards. And right now what I'm going to do is going to try to create a new card. I'm going to go in the body, and I'm going to create a card. So for buying beers at ETC. Cool. So just created a new card. I just created a new self-custodial card attached to my smart contract account. And now I can go out there and spend, right? So if I'm going here, right now I have 3 cards, should refresh the page, and there's my new card. So pretty simple, right? And this is what we think it should be. And the most important thing for me is that you get this experience built in, whether you are in Brazil, whether you're in the US, whether you're in the UK, whether you're in Asia. It doesn't really matter for us. We built this all-in-one compliance toolbox that enables you to have all these banking rails and all these cards, whatever you are. So what I was mentioning before, the last box there, like a user in Brazil today have access to Pix, but also has a Euro account. So let's say that someone from Brazil is traveling to Europe and decides to stay a few more months, basically paying rent. They can on-ramp their funds using PIX, using on-chain FX, and then directly pay their landlord in their traditional bank accounts. So, in summary here, we're all used to this global tech, right? We're all used to having Spotify for listening to music, Netflix for entertainment, Uber for transportations, and wherever we go around the world, we basically enjoy the same experience, right? But today, that's not the case with banking, because if you move from the US to Germany, you're going to move from JP Morgan to Deutsche Bank. So that's what we're introducing right now, this concept of a global account. And so if you're a aspiring neobank, if you're a wallet, or if you're a centralized exchange, thinking about your on-chain strategy, then I would say I would encourage to get in touch with us, and let's write the next chapter of history together. Cool, thank you. How much time do I have for questions? 4 minutes? Okay, we have one right there.
Thank you. I'm just wondering about the on-chain FX piece. Let's say I have USDC in my smart account and I'm paying in euros for a coffee in Berlin. How does USDC get exchanged to euro, and at what rate?
Yeah, so normally what happens is that every time that you tap a card, so let's say that you have USDC and you're in Europe, right? When you tap the card, Visa sends me 2 messages. It sends me the amount in local, in euros, and how much that corresponds in US dollars. So I take that FX, and I charge you that. And that's, by the way, the cheapest FX you can possibly get on the market. That's what Revolut is doing, that's what all the other ones are doing. And it's pretty good. It's based on on the European Central Bank rates and a few other things. So that's how it works. By the way, we're right now building the multi-currency infrastructure, which right now it's not there yet. So at the moment we have just either you have a card in USDC, or you have a card in Euro, or you have a card in GBPE, and you can spend just these 3 currencies based on the country of origin. So if you're in Brazil, you get a USDC card. If you're in Europe, you get a Euro card. But in the next few months, we are creating the multi-currency, so you can spend in all this different currency and decide which assets you're going to be spending.
Thanks.
There's one back there, I see.
Maybe I didn't get it. So if I have USDC and I buy something in Berlin, what's the off-ramp? There's got to be an off-ramp cost. Take that money up from crypto into to fiat, doesn't there?
So we're basically using a series of on stablecoin issuers that don't necessarily that their business model is not to charge. So you can enter and exit at 0 cost. So if I send €100, I get €100 if I send €100 I get €100, and you're integrating the SEPA instinct. And okay. we're choosing these partners everywhere we go. In the case of USDC specifically, they do charge a little fee. I think it's like 35 bips, something like that. Mm-hmm. I forgot. But we are basically sponsoring for the moment.
So you don't use USDC?
No, I mean.
Oh, you do. But
I do.
Okay.
So that off ramp is sponsored by Gnosis ecosystem at the moment.
Okay.
Because you can, when you approach things as an ecosystem, is usually the economics and the things that you can do is a lot better, rather than just you being a startup and having just a specific product. So if, for example, you can make money off of someone using your DEX, or you can make money off of people having more transactions on your chain. So the economics becomes a little bit different.
Okay, thank you.
So we have limited time. We have just 2 minutes. So if you can ask a quick question and a quick answer, okay?
Are all these people here just to see our talk, or is there another very famous talk after? This is really cool.
Quick question. Every payment is basically off-ramping.
Yeah.
Now, will there be a time where if the merchant actually also, accepts crypto payments, that you would bypass Visa and just send them the USDC or the Euro E to basically like only use the crypto rails and not only depend on fiat?
Yeah, so great question. First of all, in the case of USDC right now, we're actually settling Visa directly on chain. And that has already massive amounts of benefits because all of a sudden you don't need to store collateral in a bank account, which usually is like 3 days worth of your volume. So because you're doing things on chain, you can actually make transfers over the weekend. The bank is not closed, so you're reducing the amount of money that is being put in a collateral account. So we're already doing the USDC part. And then related to the stablecoin part, for me, that is the next thing where the market is going. I think that Visa, we should always be using Visa and MasterCard for the authorization side of things. So meaning recognizing that the card is yours and the POS is from the merchant. That makes a lot of sense. The guys have spent 50 years developing that network and it's very, very costly to replace. But on the clearing and settlement side of things, which is the other part of payments, is the actual movement of money, that can be revolutionized using blockchain. So, and that's usually where the biggest cost of MasterCard and Visa is.
Okay, if somebody have any other questions, I think Mr. Speaker is not going to leave after this, so you can ask him privately.
All right. Thanks, guys.